Hi, it's Joe Mazumdar of Exploration Insights at the Metals Investor Forum, January 2024 edition in Vancouver. And with me right now is the CEO, George Ogilvie of Arizona Sonora Copper. Arizona Sonora Copper is, strangely enough, developing a copper project in Sonora, in Arizona. But what is, like, retail does not like development projects, and so but I love copper, and a lot of people do. So why should they want to gain exposure to a development project in Arizona?
Well, I think the key attributes of this one is it's all on private land. It has access to water.
So what does that mean if you're on private land?
Well, what it means is there's no federal nexus when it comes to the permitting. So when we apply for permits, we're only dealing with the local municipality and the state regulator. Once you make an application for a permit, within 6 months, the regulator must give you a response to your permit. And the longest we've had to wait for any permit to date has been 5 months. So the Cactus Project today, which consists of surface stockpile, the Cactus West open pit, which was formerly mined, and adjacent to that, an underground deposit that we call Cactus East. Today, that is fully permitted, and had the company have the money in the bank account to develop the project into construction and development,
you could do it now.
We could move ahead with that today.
Right.
What is not permitted is a deposit 2 kilometers to the southwest, all on private land, known as Park Salier, which is going to be incorporated into this pre-feasibility study that we have coming to the market in the next several weeks. And with that being in the public domain, we then apply for amendments to the permits, and by the third quarter of this year, we'll have those amended permits in hand for the entirety of the project. And as soon as the bankable feasibility is done early next year with project financing, we're shovel ready, we can move ahead, and we're showing an 18 to 24 month construction and development period, which means we can see first cathode production here before the end of 2026. And because it's cathode, it'll go right into the US domestic supply, where we think the demand is going to be exponential as the government moves to green energy, decarbonization, getting away from fossil fuels. We know there's going to be more electrical vehicles on the road, charging stations, solar panels, wind farms. They're all going to require copper.
Yeah, because any copper concentrate project in the States really has to go overseas to get smelted, because there's not a lot of smelting capacity in the States.
That's correct. Most concentrates today, I think 50% of the concentrates in the world end up in China.
Yeah.
And of course, you know, given the relations between the US and China, which have obviously deteriorated, having a product which is going to be in the US, I think is a tremendous advantage. What it will also do for us, Joe, is it'll open up funding opportunities.
Oh, like the Department of Energy or Department of Interior.
Correct.
Yeah.
So myself and the CFO were in Washington, D.C. last October. We introduced ourselves for the first time to the Department of Energy. With the pre-feasibility study now coming out in the next several weeks, we go back to Washington in April of this year.
Okay.
And we're currently running a little bit of an interview process with various groups who have experience in helping companies through the application.
Like lobby groups or something like that?
Well, they actually do specifically applications for government grants and or low cost of capital funding.
For critical minerals?
Right, exactly, which copper is according to the DOE. So that process can be lengthy, 12 to 18 months, but if we start it now, and as I said earlier, we have this
based
bankable
on the PFS.
Correct.
Right, yeah.
And we have the bankable feasibility study out in the early part of 2025, we could actually time the project financing at a point in time where as part of that financing, we're getting access to Department of Energy or the Department of Defense as another government agency that classifies copper as a critical mineral as part of that project financing.
What about car manufacturers directly? Is that an option?
It certainly is. Interestingly, in the city of Casa Grande with 55,000 people, which is only 5 kilometers east of the project, today there are 2 American US electrical vehicle manufacturers, Nikola Trucks and Lucid Motors, actually has a manufacturing plant right in Casa Grande producing cars today which are being sold. So, of course, they don't need copper cathode, but they do need copper wire for those electrical motors and the wiring in the cars, and also the copper foil for those batteries.
Right. So, but also in terms of financing, like when we talk about Arizona Sonora's Cactus and Park Salyer project, we're talking about oxide and leachable copper that's that you use a solvent extraction electrowinning process to recover. But there's also the sulfide resource, and you've just, talked about recently an option agreement with Newton, wholly owned subsidiary of Rio Tinto, almost like a processing arm with copper. Can you give us some details about how that's going to work?
Yeah, so Newton invested in the company a couple of years ago now at the top co. They were a 7.2% shareholder. They wanted to invest more monies into the company to advance the Newton technology. The primary sulfides at site, which is almost about 2 billion pounds of what we call a stranded resource, meaning the shareholders get no value for it, as you alluded to. It's not in any of our production plans. They've wanted to fund that, but we didn't want to just issue equity and dilute the shareholders down. So we came up with a structure which we call an option to JV. In the short term, they provide us with $33 million of non-equity, non-dilutive financing, $10 million to ourselves just for the signing of the agreement that we can use any way we want, $12 million to develop the programs for the Newton test program at site this year, of which there's almost $3 million of a management fee, which goes to our corporate and site G&A, and then $11 million for critical land payments over the next year as we gain access to title on some of the land that we have at site. So that's great.
And this is all money you're not raising in the market.
That's all money that we don't have to raise in the market. And right now, the company's sitting with $21 million cash in the bank and access to an additional $18 million over the course of the next 12 months from that Newton transaction that I just described. Beyond that, if Newton is able to show from a financial perspective that there's an uplift in what we call a Newton integrated PFS of at least 1.39 times the NPV of our base case project, then they can potentially earn in for up to 40% of the attributable copper at the asset level. But the key point within that agreement is that first and foremost, they have to pay the Arizona Sonora shareholders for 40% of the base case value of the project at a 0.65 times price to NAV.
That's the base case without the sulfides.
Correct.
Right.
So I'll just throw out a number as an example.
Which we will see in several weeks.
When the PFS comes out. Right. But if we just keeps the math simple, let's assume post-tax NPV at the moment is $500 million. 40% of that is $200 million, and at a 0.65 times PNAV multiple, that would multiply those two numbers together. It's $130 million of potential funding. So we get to use that money for the project financing. If we then say that the project financing is $500 million, now bear in mind, Newton would have to fund 40% of that, and I would have to fund 60%. So 60% of 500 million is $300 million, 50% equity, 50% debt. So I would have to find $150 million of equity financing. Now, if we've received a payment from Newton for close to $130 million, the delta is now only $20 million. So in that scenario, I'm only issuing a few tens of millions of shares, and it's not dilutive, and therefore on a NAV per share basis, could be hugely accretive.
But also that $20 million could come from the U.S. government.
Could come from the U.S. government. Remember, there's about $150 million under that scenario I gave that would have to come from debt financing, and that's where.
Oh, some of those are grants. They're not even debt.
Well, exactly. Yeah. They're grants.
Because if you build a processing plant, then you get those grants. If you just have a mine, they don't give them to you.
Exactly.
Yeah.
And we are building a processing plant. And it gets better as well because you can access additional grants because you could argue the Newton technology as well is research and development. So we don't just get grants for our own
like
base
Newton.
case, like Newton.
Right,
So we don't just get grants for our own base case project, but if Newton advances as well, it'll give us access to research and development grants as a JV
Right.
with Newton
Because
from
it's
the
hard
federal
to permit
government.
smelting capacity in the States, but if you can get
It's
another
heat leach
technology.
with copper cathode, and it's going right into US domestic supply. What a wonderful story that would be.
Okay, so in terms of catalysts, the critical catalyst, the next one is this PFS,
Feasibility
which
study.
will also have an updated resource, because now you're incorporated more M&I into Park Salyer, if you upgraded it.
Correct.
But we won't see any mainspring in there because it's still inferred.
Mainspring is not even inferred at the moment. We're drilling it out.
Yeah.
And at the end of the first quarter, we'll have it as an inferred resource. And by the summer, we'll have it drilled out into an indicated resource. So the summer of this year would come out with an updated mineral resource estimate that will now bring mainspring into the equation. And there's then an opportunity before the end of the year to incorporate that into an updated PFS as a standalone basis.
Right, that they would have to multiply that, then that one. not the
Correct.
old one. Yeah, okay.
Correct. That then takes the basically the standalone PFS. And of course, it can then move forward as well into our own bankable feasibility study.
Right, so a lot coming. Development project in a critical mineral, which is copper. Good jurisdiction, but not with all the issues other people have because you're mostly private land. With water capacity, which is important, especially down there, drought conditions and that, and funded.
Funded. Exactly.
All right, well, thank you very much, George.
Pleasure, Joe. Thank you ever so much.
That's Arizona Sonora CEO George Ogilvie. And that's it for me, Joe Mazumdar, Exploration Insights from the January 2024 edition of the Metals Investment Forum in Vancouver. Thank you very much.